Welcome to the official announcement of the RexDog Average indicator. You can find a link to this indicator down below. It's on TradingView. It is public. In this video, I'll walk through what the RexDog Average is, some minor usages. We're going to actually go through a vast array of markets and a vast array of timeframes, and you'll see why I created the RexDog Average, why I use it in my trading, and why it is the foundation of the first thing that I look at on a chart. So this is the actual TradingView page. Now let's go to a chart. Now let's set the table a little bit of what you're looking at. The yellow line that you see on the chart is the RexDog Average. It is RDAVG here, shortened. The red line that you see here is the 200 MA. Now I'll talk about why we created the RexDog Average. You know, Rex and I sat down and we said we wanted a moving average. We wanted one thing, and this is something I would suggest you do in your trading. And if you're going through the RexDog Trading Method, this is the first thing you're going to learn, which is you need one thing that you look at immediately at a chart. Then there's a couple other things, but that one thing is your barometer or your benchmark of any market, any chart. And you'll see here as we go through this how powerful this is. And what you're looking at is where is price relative to that barometer or that benchmark. In addition, you're looking at how far away is it. If it's looking high or low, you're really just gauging an immediate 5-second analysis of, on this chart, on this time frame, where is price relative to my benchmark that I use, that I trust, that I trade with conviction. Now this benchmark is used as bias. So right now, and the simple way to look at this is that if price is above the RexDog Average, then my bias on this time frame is a momentum trade to the long side. Any short trades are fades. Another way to look at it is when price is below, obviously my bias is short, so my momentum trades are short, and any long trades are fades on this time frame. We can switch time frames real quick, go to the hour time frame. We can see price has been below for a while the RexDog Average, well below the 200 as well. We can go to the 5-minute. We can see right now what's happening on Bitcoin in real time. It's testing the daily open. And that daily open happens to be right around where the RexDog Average is. So if we see a spike through the RexDog Average and a close above, then I would probably close out my short right now, because I am shorting this. I'm shorting any pop that comes into this. So I'm in a short position and I have shorts kind of entries all the way up to here, with the expectation it's going to overshoot the open. And I'm not going to get into trading advice here or trading tips, but what it's going to overshoot the open, eventually fail, then come down to where I think the target is. But as you can see, using the RexDog Average on the 5-minute time frame, it's starting to, and this is something I'm going to mention before we go further. There's a couple new things as I've come back that I'll start doing and I'll start reinforcing. You no longer use the word trend, so we've banned the word trend. It's momentum. So I'll do a video on this. There's no trend. I'm not going to hijack this video. I'm not going to go too far off the rails. The other thing is that price does not come and test the RexDog Average. That is not what is happening. The way you need to think about this, and the way I want you to think about this as we look at the rest of the charts here, is that the RexDog Average is providing you the average price, and I'll tell you what it's made up of here in a second, the average price of the market. And the market momentum, the momentum of the market has to go back and reinforce that momentum that it's at is correct. I'll do a further video and a more extensive video on this thinking and why you need to think this way, and why it's going to the 200 moving average, for instance, and it's bouncing off that. That's not what's happening. It is what you see on the chart, but the way you want to start thinking about it so you trade correctly and so that you read the chart correctly is that the momentum, it's a momentum move, and the momentum of that direction, because momentum is constantly changing, but that current momentum is coming in to your benchmark, which is the RexDog Average. All right, plain and simple. All right, I had to pause the video. I don't want to hijack it, but you know, like I said, I'm in the middle of a short, and if we go back here, just to kind of share some real time analysis, look at it came up in price, went to where the RexDog average is saying that average kind of barometer is. And right now it's in a battle to whether or not it wants to hold the daily close. Now, my best shorts didn't get picked up, but I did take some off here just because it's just not, I want to see it really fail. I want it to really slap the buyers. At this point, it might come back and retest it again and get above it. So it's just, I probably shouldn't be recording the video, but that's what happens. I'll try to ignore it as we go forward here. So let's talk about what the RexDog average is made up of. Now, many of you are going to discount this, and many people will be like, oh, okay, that's rather simple. But I would say, who says that things in trading have to be complex? In fact, if you're trading and things are difficult, you're probably going to have a really difficult time trading because you have to think a lot. The less times you have to think in trading, and the best that you follow your rules, your actions, and you trade with conviction, the more successful you're going to be as a trader. So the RexDog average is simple. And Rex and I, we searched long and far. We went through, we tried the 200. We were looking like, we want that one benchmark. We tried many other indicators, many different derivatives, but we settled on this. The RexDog average is an average of the simple moving averages of the 200, and you see it right here on the screen. The 200, the 100, the 50, the 24, the 9, and the 5. Averaged. Simple. Now there will be more advanced RexDog averages coming out. So I have those and I'm working on those. We're working on an exponential moving average that has a little bit more mathematical stuff to it. But at the bottom line, this is the one I use. This is the base of my system. And you'll see here as we start going through the markets. I don't want to make this video too long. So let's just start going through the markets and going through different time frames. And what I'm going to do is I'm just going to go through the markets. Let's just go through. We're going to go through many different markets. We're going to start on the daily time frame. So we're on the daily time frame. Bitcoin, as you can see, let's go back. See how nicely it's kind of just, I mean, it's pretty obvious if you look at the chart, but see the RexDog average was checked in here back in January 21. And it was checked in back here and it ultimately failed. This is your first kind of, when you see something like this on the RexDog average, for instance, and it fails, but it gets below it and it closes below it a couple times on that time frame, this is kind of a warning. It's actually say, hey, something probably has changed here. And it actually is where you should probably start looking at selling the tops. And that's what happened. So it came closed below. Now you might say, well, it eventually closed above it, and it did rip right through it there, right? You might say, okay, that's a strong move, and that's true. That means your short-term bias would change, but this should be a shot across the bow for you that, hey, there could be a day like what happened here, and it could happen quick because it's already signaling kind of where it wants to go. All right, let's look at the hour time frame. Once again, this works on any time frame. We already looked at that. Let's look at the 30-minute, the structure time frame. Structure time frame kind of shows you the same thing. Now let's start going to other markets. So we're going to go to Forex, odd CAD. We're going to cover everything: futures, Forex, equities. What else are we going to? We'll just start jumping in. So the daily, the Australian dollar, closed below it, tested above. Closed below it, tested above. This would have been a signal that, hey, maybe it might come back above, but it didn't. Eventually closed below it. We can go back further. We can see just kind of the history of where the bias would be. US CAD, same type of thing. I mean, some of this is obvious if you're just looking at the charts as well. But once again, it's an instant bias indicator. You're looking at how far away is it from it. Does that mean that I could maybe do a fade trade to the upside? Let's look at the hour time frame. Eventually, I'm going to get to a market you love to trade. You can see here, I'm just showing that it's pretty, what I'm really trying to show is just, it's a pretty reliable signal compared to the 200 moving average. Because look, yeah, the 200 moving average checks in, but if you're using the RexDog average for a kind of initial bias test and maybe even a trade trigger or a trade entry area, it does a lot better than the 200 moving average. Let's go back to the daily time frame. Let's do the Chinese, what is it, yen, whatever it is. Once again, go back. We can see that it's well below it. It never really checked. It checked in here. That would have been a great entry. But then now it's coming back and it's got 2 above. That means that maybe this momentum is dying out. Let's look at the hour time frame. Let's look at the 15-minute time frame. Same type of thing. Let's go to Bitcoin. Well, we've already looked at Bitcoin. Let's look at Ethereum. Ethereum on the daily. I mean, this thing is just ran, right? And it looks like it might want to check in. So I would say based on this, I'm shorting the tops. I'm shorting every high. Every high I'm shorting, and then my eventual target is down to the RexDog average. Litecoin did check in yesterday. I say check in once again. I don't want to fully go with the verbiage that I like to start using until I explain it. So I'm still using verbiage that I'd say the majority of traders use or understand. I don't want to change the verbiage of trading, but what I want to do is basically help you frame your mind so you're always thinking in the right direction. BNB BTC, this hasn't checked into the RexDog average for a while. Let's look at where the 1 hour is. So it did rip through the 1 hour. So my trade on this would be potentially, if I thought that I should be long on this, I would then look for an entry around this area. FCX, one of my best trades for the year. This is an equity. Freeport McMoran. I guess I didn't even know it was McMoran. I literally just know it as FCX. So this here, I entered way down here, back in March, and added every time it hit the RexDog average. Every time it checked in, I added. Checked in there, added. Checked in there. And keep in mind, when I say checked in, it's not, it has to hit it. It's that area. So don't try to be exact. It came down here, I added. As soon as this day looked like it turned, I added. Checked in here. I was a little leery of adding here because I thought it might actually roll over, but I added. Checked in here, I added. I was leery here as well because once again, maybe that signal that it's going to roll over. I don't argue with the chart. I just read the chart, trade my system, trade the chart, and when the chart tells me that it has rolled over, then I make a decision. But as soon as it closed above, it gapped above here, and then it kind of closed here, I was confident in my additions of the positions here. Now, I'm not adding at the same size as I was here or here, but I am adding, and I think I did add a little bit on this gap up here. So I was a little worried when it came back down, but as we can see, it's continuing to go up. Bioc, I don't know if that's the way, Biocept. This is another trade. I trade this every couple months, and I do the same thing, and I'll give you, I guess not a free trade. I'll just give you what I do. I look at this as quote unquote, I got knocked out of my short, damn it. Quote unquote, a discretionary trade. Basically, every time this comes down, and I'll just give you the trade. Let's just do it. Screw it. Every time it comes down to about 20%, 18 to 20% below the RexDog average, I start buying positions. And I just wait, and I just wait, and I just wait. And what I do, this is a simple trade. I go and do an anchored VWAP from the high, the previous high. I do maybe the previous high. And I just buy, I buy. And then when it gets above this anchor VWAP, it starts, and then it runs, I sell. So I sell up here. So what was I doing? I was buying, waiting. And then once it does its run, I sell. This happens all the time with this thing. Now you have to be careful because you have to look out for this. But look, it's here, buy, sell. It comes back down, buy, sell. Now, sometimes, like I said, you have to understand, like, I literally have a drop dead because sometimes it will gap down. So if it gaps down, it's happened once in me trading this for, I don't know how long I've been trading this. This isn't a trade I recommend anybody do. It's just, I'm not recommending, I'm not giving you financial advice. It's just a trade I do just because I've noticed that this thing, when it gets low, buy and then sell the pops. You know, I'm sure there's tons of trades like that. But as you can see, the RexDog average does a good job here as well. We go to the 30-minute time frame because that's a structured time frame. We can see that you can see when it's showing that there's a downward momentum, when maybe there's a change in momentum, and maybe that's what we're seeing here. This was the initial test of a change in momentum, and then the momentum is now changing. As long as it closes above the RexDog average today on the 30-minute time frame, I might expect an additional pop. So again, I'm just giving kind of high level on how to use this in my training. You'll learn all the tips on how to use this. Core, this is a trade that I've waited all year for. This is another equity, buying in the 170s area. And then if precious metals and gold pops, this thing is going to fly. So I think this thing's going to fly. But as you can see, I was adding below. But at this day here where it ripped through the RexDog average, should have been a warning to you that, hey, something changed. Also, it was going to the 200. So this would have been a good time the next following day to maybe add if you believed in this trade or if this was on your radar. We go back. We can see that it checks in. DocU. This is a little bit more of a choppy chart, but we can see that, you know, it's showing you that at least the momentum's still on the long side, and then it started to change right here. When it did pop above this probably would have been a great place to short or to take some profit, obviously. Oh, this symbol here. This is my conglomerate big tech symbol. It's made up of Facebook, Apple, Amazon, Microsoft, Google, and Tesla. And basically, it's just a combination of those symbols. I use this as a trading the NASDAQ as well. But you can see here, this is showing that obviously there's a clear uptrend with the RexDog average going all the way up. Let's move on. Let's go to the 10-year. 30-year Treasury year yield, CBO. You can see this here on the 30-year. Once again, the RexDog average changed over at 12 August 20. Started to kind of like say, hey, I want to maybe change my momentum from the downside. And then from there, it didn't really look back. It just kind of went from 2015 October. Once it ripped through the RexDog average, it kind of just had an upward momentum from there. VIX. VIX is the same thing. VIX is below the RexDog average, so we're expecting low volatility. Once it gets above the RexDog average, I expect a very high volatility. Let's look at the VVIX. If you don't know what this is the volatility of the VIX. So it's the VIX volatility. One trader on YouTube says the volatility of the volatility index. This is another thing that I watch. As you can see, it's above the RexDog average. The way to look at this is more professional traders follow this, and this is kind of a gauge of what the pros are doing. The pros are still elevated in their volatility, at least they're looking at it. XLF, let's look at that. XLF is the financial spider. I'm trying to think of what the word is, but I'm drawing a blank. You can see here once again, I mean, this is since March, this year, it's been obvious with some charts, but you can see the RexDog average provides you a pretty good way or gauge on looking to see. And one thing you can do too is using the RexDog average, you can say, well, what was that average pullback to the RexDog average? It was 8.7%. So you're looking for close percent pullbacks if you want to add again in a fast moving market. You might want to take 1% or 2% off of that, and then you're looking to add. Because once again, in a fast momentum upside downside market, you're not going to maybe have a lot of opportunity to add. So you have to really analyze it, look at it, and say, okay, where is my opportunities to add? And especially if you're long term. XLE. Once again, checked in. This isn't really, I guess, I feel like I'm trying to prove things to you, but I'm really just showing you different markets. Tesla, everybody's favorite car company. So Tesla broke the RexDog average. It's going to probably come back up here and retest it. Heck, it might even go back up here and test the highs. Who knows? But as you can see here, right now, your bias on the daily The larger time frame should be the short side. WTI or US oil, black gold, as we can see here on the US oil chart, changeover in the November 20th or November 2020. The RexDog average told you that you should have a long bias. It did check in around 23 March, and since then it's been a long bias. Now in the 30-minute structure time frame, this is another one where I look for, I do trade oil futures, and I do look for obviously anything below, as the overall bias is long, then my momentum trades, I'm looking for, I should pay attention type of candles. This is an I should pay attention type of candle right there, and especially when it rips through the RexDog average. So then I went long, and I was long. Here once again, this is I should pay attention candle. It's short. Okay, I should be short. This is not a momentum. That would not be a momentum trade. It'd be a fade trade. So I'm fading the overall longer term momentum. Short. I did short it, and then I haven't been trading today after that or since then because I've been recording videos and doing other stuff. But as you can see here on US oil, we can even go to the 5-minute time frame. You're going to see the same type of thing. 5-minute time frame gives you a good barometer of where is the momentum for the day for the market. You can see here the barometer on the previous day was up. So this is just another, once again, another chart. Let's move on. This is gold futures. Once again, gold futures. You can see here, this was this candle alone right here, should have been a shot across the bow on gold, which is like, okay, something changed. And the fact that it ripped through the RexDog average and closed down here, especially at the 200, it should have been a sign that, hey, I'm selling all the pops. And the best entry on the short is 50% of this candle here. It's going, where is it going right now? I can tell you right now. I can't tell you beyond a reasonable doubt, but my feeling is it's going to test this breakup candle right here. That's the first target, and then eventually it's going to go test this breakdown candle. Breakdown. This is a breakdown candle. It's going to test this day breakdown, so that would be a high probability short if it gets there. But right now, my bias on gold is to the long side, and my target is here on this breakdown candle where I would short heavy. Let's look at the ES. Once again, ES. What do we see? Break through the RexDog average. Long momentum, check in. And now it's just kind of ranging. Let's look at a 5-minute time frame on the ES. Today, it's been below it, and it's looking to try to recapture it. My initial read of the chart right now is it probably will have enough momentum to maybe go up here and try to recapture it. Just my first glance at it. Okay, could be wrong. I don't care about being wrong either. I'm wrong so many times a day, like it's insane. So I don't care. I literally don't care about being wrong, and I will change my mind within 5 seconds if the chart tells me to. IWM, this is the ETF. That's the word I was looking for before, ETF. This is the Russell ETF. Once again, I should be mentioning this because I'm just jumping through this, but compare this to if you're using the 200. Maybe you're using the 50 or and I know the RexDog average tracks some moving averages pretty closely, but the reason why I mathematically went through this, tested this, looked at all different markets and everything else is because it's the most reliable one that puts me on the right side of the momentum. That's why I probably should have started with that. Let's go with NDX. NDX, once again, this is a shot across the bow on the NDX that, hey, maybe the momentum has changed and maybe we're looking for a bigger pullback on the NDX. We'll see if that plays out over the next couple weeks and the next couple months. But this is the first shot across the bow that, hey, something has changed in the market. The Russell, the RUT, let's look at that. Russell 2000. We are back in a long momentum. So we're back in a long bias. Of course, we're watching all these breakdown candles and all these ranges here. And you could say, too, this might have been an initial test that initial test that the Russell might be rolling over. The Dow Jones, once again, same type of thing. Check in, check in. Let's go to a 15-minute chart. 15-minute chart's a little bit more choppy, just mainly because of the time frame it's in. We go to the 5-minute charts. Oh, let's do this, and I'll do this at the end, just because I want to just show that this works in any time frame. The Nikkei, I'm probably saying that wrong, 225. We will look at the daily. Heck, let's look at the 2-day. 2-day. We're looking at the 2-day time frame. Come in, checks in. Come in, checks in. It's checking in now. Let's look at the 3-day. Come in, checks in. Come in, kind of checks in. This is a shot across the bow right now that, hey, something might have changed. Good short opportunity here. Highest probability short right now when the market opens. Maybe with a retest here or a close below. Or maybe it just continues. You don't know yet. Let's go to Bitcoin, because it's still playing around with this open for some odd reason. Buyers still. So just so you know, or just so I can share, my eventual target on this thing is it wants to check in with the 200 MA. So, like, I mean, you can buy here, but it's so close. Like, if I controlled the market, I would be, I dip well below it, 30, 38 something. And then I expect, here's what I want to see. I'm not trying to hijack the video, but I wanted to come down here, and it better, if it comes down below that 200 and gets down to here, it better rip like that. It better rip. So that's, I mean, at least not maybe that much, but let's say it better rip 15%. So it better rip. Otherwise, then, we'll have to really rethink of like, where's the downside target? So that's what I'm looking for. So the buyers are buying now. I think if you're thinking about probabilities, what's the probability it's going to come up here and not come test the 200? I think the probability is low compared to that it wants to come down and test the 200. Once again, I'm using verbiage that I'm not going to be using going forward, but I'm just doing that because that's how kind of traders talk. Let's go to the 1 minute. That's what I wanted to do to end this video. 1 minute, same type of thing. RexDog Average. Look, yeah, it's a fast-moving chart, but okay, RexDog Average has been breached. Went to test it. Went down. Ultimately, 2%. It extended from the RexDog Average. Came back, snapped back to the RexDog Average. Gapped above it. I don't think I've seen a gap on a 1 minute chart in a while. Gapped above it. And then maybe you entered on a retest thinking that, okay, I'm fading this. It's going to fail on the short side. And then you're back up and it ripped 1.4%. Right now it's at the open, right? Your best trade right now is up here. So your best trade is the short trade right here. That's your best trade. So, and it might get there. And maybe I'll be ending the video here within 2 seconds, a couple seconds, and I will actually enter that trade. So, in closing, I know I just kind of just went on and on and on. And why did I do that? Plain and simple. I just wanted to show you that the RexDog Average can be used across all markets. It's pretty much reliable on all time frames. It's not something I just kind of created yesterday and just threw out there. It's something I've been using in the markets for a long time. I've tested it. I've ran it mathematically. I've tested it against different markets. I tested it even in historical markets. So it's not something I just kind of threw together and said, hey, this is kind of cool. No, it's something I used. It's the backbone of my system. And if you're going to be in the RexDog Trading Method training, which is open now, you can join. Just go to Discord, ask me how. But basically, it's the foundation of the system. It's the first thing you're going to be looking at on a chart. It's available on TradingView. Click the link below to get it. See you in the next video.